Syrma SGS. Now, it's in the spotlight today because post the numbers, the stock has really cracked badly, 6.5% lower. But there is a bull argument to this as well because the margin performance has looked very, very strong. So, Puneet Johnson, to talk about the bull versus bear case for Syrma.
Well, thank you for that. Definitely a very big bull case forming in because of the Q4 earnings. But there have been 2 to 3 key negatives, and we'll highlight that as well. In the first bull and bear case, the order inflow, that's been slightly negative in this particular year. It was expected that fourth quarter would have new order inflows coming in from European clients. But the company has outlined that there was some impact of tariffs there, and clients have pulled back some spending as well as orders. And essentially, that's impacted the order inflow in this particular quarter as well as the full year. That's the first bear case. Essentially, the low margin consumer business share has been falling. It was 40% in FY24. It's now 35%. The company is now anticipating this to go to 30% over the next year. What this does is it's boosting margins significantly. In this quarter, the last quarter of FY25, margins were up 505 basis points from 6.6 to 11.6, and hence lowering of the consumer business share, something that the company has been harping on for a while, is now boosting the margins effectively, and that's something that the street likes. When you look at the second bull and bear case for Syrma, the key aspect is the export revenue for this year. It was expected to be 1,000 crores. It's coming at 854 for FY25, and that could be one of the key reasons because these are high margin orders in the industrial and the auto segment. That's not come through, at least what the company had guided for, could be one of the potential reasons as well for Syrma to fall in trade today, because exports forms roughly 1/4 of the revenue for the company. In terms of bull case, we've seen a new good customer additions in this particular quarter, and that's also happened largely in the domestic business as well. So it's competing well with its peers like Kaynes Tech in the auto segment. That's a positive. That's the second bull and bear case. The third one is, of course, on the stock reaction as well. When the Sensex ran up, the Nifty ran up 900 points, Syrma was up 14%. It was up again on Monday. So 17% run up before the results. So slight disappointment as well, which has come in now in this particular quarter because of the export, has taken the stock down, but it's still up significantly in this particular month. Could be a key reason to watch out for. And the bull case has been the industrial and the auto business. The industrial business now forms 44% of the revenue. It's become the highest in terms of revenue contribution. And that's because of the smart meter segment of the company. We've seen multiple companies in the EMS as well as the engineering companies getting a lot of orders in the smart meter space. Syrma is also one of the key gainers, and they are going to be at the tier 2 manufacturer for a lot of companies. So that's one of the key aspects. Auto segment also contributing more than 20%. So 69% of the revenue is now the high margin business. Finally, in terms of valuation, 29 times FY27 for something like a Syrma. In comparison, Dixon trades at 80 times. A Kaynes Tech and an Amber are at 60 times. So the valuation is definitely in favor. I think the street is right now on the fence because of revenue growth, and that's not there because of the consumer business. But the EBITDA margin will be something that brokerages will incorporate maybe tomorrow because the conference call happened during the day today. The lower export growth has been one key negative, and a share of consumer falling will impact revenue growth but will help margin. So I think it's a to and fro between margin growth as well as revenue for something like a Syrma, but definitely a stock to keep on your radar going forward based on relative valuation as well.
In fact, we spoke to J.S. Gujral, MD of Syrma SGS, about their top-line growth outlook for FY26. Listen.
We achieved a top line of about 3,800 crores this year in FY25. Going forward, I think we would be growing at about 30 or 35% for the next year, and maybe at the same percent or marginally higher or marginally lower percent in 26, 27. So I don't think that matches up to the 6,500 crores you said, but my growth will be about 30, 35%. What we had shared earlier this year, that we are recalibrating our strategy to focus on high margin verticals. And that is essentially the industrial, the healthcare, and the automotive. And I'm very happy to share with all of you that in the current year, we have been able to bring down the low margin consumer business to about 35% of our revenue, which was a target which I had set for ourselves. And the balance 65% is a high margin business. Going forward, we'll try to recalibrate this again and endeavor and bring down the consumer business to below 35% or closer to 30% by the end of this year on a year-on-year basis. Now, if that was to materialize, then I think we are on track to achieving superior EBITDA margins of about 8%.
Okay.